Welcome to Nasdaq TradeTalks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. We're coming to you live from Mainnet 2024 by Masari. Joining me for this segment, we have Oliver Gale. He's co-founder and CEO of Panther Protocol. We're here to discuss developments in DeFi privacy technologies. It is great to have you with us, Oliver. Welcome to TradeTalks.
Thank you so much for having me.
You got it. Let's talk about the strategic developments as it relates to DeFi and privacy, because when I hear that, it lends to the fact that the space is maturing.
Yeah, I mean, we have a $2 trillion problem in the DeFi space, which is that all of these assets today are pseudonymously traded, meaning that anyone with a block explorer can come onto a website and look at any address and see the entire transaction history. And that's what Panther's addressing, is that loss of confidentiality and privacy when using Web3 financial tools.
Yeah. Is there a global demand that's growing around privacy enhanced financial systems and the type of technologies that you're developing?
Yeah, we've certainly seen that. I mean, what we've been observing as we've been building this technology over the last 4 years is that the industry is becoming much more interested in how do they act. So they've gone past the point of we want to use Web3 financial tools and blockchains. That's clear. They are now at the point where they're saying, oh, well, there's liquidity, we can actually participate and build financial tools. And then the next two questions that come up are, oh, wait, but hold on. Everything that we do is publicly available. How do we do that confidentially? And then coming out of that, when you say privacy, the next question is, well, how do I do that with compliance? And how do I do that in line with my regulators? So Panther's been building that sort of intersection between privacy and compliance tooling. And what we're finding now is that there's this conversation that's been starting of, we need that confidential execution system. We also need to satisfy our regulators, and we can't do one without the other.
Which is so interesting because it feels as if the conversations have shifted from evangelizing blockchain technology to the user experience, right?
Yeah.
So it's not like we're talking about concepts here, we're talking about implementation. How challenging is that, considering there are multiple jurisdictions around the world that DeFi companies need the frameworks around, right? You're dealing with all these different types of jurisdictions. How challenging is that when you're trying to develop a privacy strategy?
Super challenging. I mean, the bottom line of that story is every jurisdiction has a different set of laws and regulations. Every company has every financial services business has a different compliance department, a different product, a different appetite to risk. And so if you're going to build a global piece of infrastructure that everyone can use, you have to build it in a way where it's modular and where you can support arbitrary data disclosure or compliance tools. And so from the first stages, we sort of did that analysis and said, look, if we're going to build infrastructure for privacy for financial institutions anywhere around the world, then we have to enable each of those players to integrate their own compliance systems and calibrate their own risk management.
And so this is how your customers, as an example, is leveraging the Panther protocol to be able to develop these compliance systems within their platforms.
Yeah, so what Panther does is we have this macro privacy infrastructure, and we allow each financial services business to deploy a zone. And they're fully in control of the zone. It's this white labeled walled garden. They onboard their users. The users are enabled with any number of services. So from Panther, they can interact with third-party DeFi contracts. All of that, however, is subject to the zone manager's approval. And that zone manager is the financial services business. So this really brings us to a Web 2 type experience where a user doesn't need to be familiar with the underlying pipes and rails that they're using. They just need to know that they're a client of XYZ provider. They do their onboarding with that provider, and then once onboarded, they can now interact with DeFi, and they can do that privately from the perspective of the world.
And that goes back to user experience, right? They just
Totally.
want to make sure they can go from point A to point B, right?
Yeah.
And not get kind of tied up in the underlying technology, the developing engineering side of it.
Yes, I mean, there's some very heavy cryptography in the zero knowledge space and privacy enhancing technologies, and blockchains as well. Being in this industry over the last 11 years, the conversation began with the promise, and then huge amounts of innovation at the infrastructure level. We still see a lot of that, but largely the infrastructure's there, the pipes are there. There's a handful of applications that have found product market fit in global scale, and the job of the industry now is to actually deliver the applications that people want to solve their problems. So it's no longer this gamesmanship of, well, here's the promise. It's like, actually, like, where's the solution to my problem?
See, and that makes sense. Sometimes you don't want to attach, I mean, AI, everyone's talking about AI now. You don't necessarily want to attach AI to your name just to say you have it, but what problem are you looking to solve? So speaking of that, as the industry matures, do you expect to see further consolidation in certain areas of the blockchain space, or how else do you see it maturing?
I think there's actually a role of mergers and acquisitions happening. There are blockchain projects. Sometimes the protocol itself, protocols will do mergers or acquisitions and token swaps, but also we're seeing companies, the larger players who found that market share, are acquiring some of the more exotic and interesting products or acquiring the teams, and I think that's very healthy for the industry. We had a huge bull run, obviously, in 2021 and the last few years, and this has happened time and again in this market.
It's happening in every market, though.
It happens in all markets, really. But you see the consolidation, and with that, the weak players are weaned out, and those who remain are the ones who are focused on delivering something that actually has an impact and generates revenue, whether it's at a company level or a protocol level.
All right.
Protocols earn revenues too.
All right, Oliver, appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me from Mainnet. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.